Okay. 10 o'clock, and as usual, people are not logged in yet. Okay, everybody hear me? Last time we were looking at the week 7 PowerPoint, and the last one where we stopped was talking about materiality issues. So here we have the PowerPoint slide that we left off on. And I've been thinking it's kind of cumbersome when I'm trying to do the PowerPoint slides as a presentation, because then I can not only not see anybody or the chats. I don't hear anything. I don't know how you're responding. So if I do it this way by just looking at the slides in the way that you use when you're preparing it, then I can see, and if you have a question, you can wave your hand or something. Even now, when I do the share screen, it closes the chat for me, so I can't see what anybody's writing. So that's the last slide we were on right here. So if we go to the next one, biblical integration about materiality. Accounting materiality depends on relative size and the nature of the item. But what about a biblical perspective on spiritual materiality? James 2:10 says, "For the person who keeps all of the laws except one is as guilty as a person who has broken all of God's laws." Don't ever think my sins aren't really all that bad. That's confusing the symptom of our disease, which are the sins we commit, with the cause. The cause of the sins we commit is our fallen sinful nature. How that sin nature is manifested will vary, but it is for everyone a fatal disease. So there really aren't any deadly sins or trivial sins either. Every sin we commit is just a symptom of our disease and proves that we are in need of a savior. In medieval times, the Roman Catholic Church had been thinking about the classical virtues, and they settled on a list of 7 virtues that the Christian should have. And then they decided that they'd offset that with a list of 7 deadly sins, sins that if you committed, you couldn't be forgiven. But that's not really biblical, because, as I was saying here, it confuses the symptom of the disease with the cause. We commit sins because we are sinners. We're not sinners because we commit sins, if that makes sense. If we have a sinful nature, then it gets acted out by our behavior one way or another. And even if it doesn't get acted out, you're just hiding it from other people. Okay, so let's move on to the next slide. After I stop and see if there's any questions or comments on that. Okay, then we're going to go to some more examples of fraud. Share screen. And Howard Shillett wrote Financial Shenanigans, How to Detect Accounting Gimmicks and Fraud in Financial Reports, a report that was first written in 1993. The third edition, in which Jeremy Perler was co-author, was published in 2010. Shillett's book listed 7 ways companies might misstate their earnings or financial position. Recording revenue too soon, recording bogus revenue. I never noticed that typo, and I've been using the slide for a long time. That should be boosting income with one-time gains, not booting. Shifting current expenses to a later or earlier period, failing to disclose liabilities, shifting current income to a later period, and shifting future expenses into the current period. So let's take a look at some more frauds, beginning with Xerox. In 2002, the SEC charged Xerox Corporation with overstating its pre-tax earnings by approximately $1.5 billion from 1997 to 2000. The SEC prepared a graph showing the impact of the fraud on reporting earnings per share. So if you take a look at this graph, the bluish purple color, that's their real earnings per share for each of the 4 quarters for 1997, 98, and 99. And the yellow is fraud that they added on top of the actual. So the actual for the 4th quarter of 97 was 56 cents per share, but they reported 71 cents per share. 4th quarter 98, actual was 54 cents. They reported 84 cents per share, and so on. The SEC listed multiple ways that Xerox management overstated revenues, including recording fictitious revenue, fraudulent lease accounting, cookie jar reserves, and improper revenue recognition. The motivation for the Xerox fraud was to polish its reputation on Wall Street and to boost its stock price. Yes, that's exactly what is needed to polish a company's reputation, a multi-billion-dollar fraud. This didn't help the reputation of KPMG, Xerox's auditor, much either. The SEC forced the firm to pay a total of $22,475,000 in disgorgement, interest, and penalties because KPMG caused and willfully aided and abetted Xerox's violations. And it seems to me like I'm seeing a pattern here in these frauds. Arthur Andersen or KPMG seem to be involved in a lot of them. The SEC said that from 1997 through 2000, KPMG permitted Xerox to manipulate its accounting practices to close a $3 billion gap between actual operating results and results reported to the investing public. During this period, Xerox used topside accounting actions, and by that they mean it's a journal entry made by top management, sometimes overriding normal internal controls. Internal controls from the perspective of some of these companies, that's just for the staff and employee who are underlings. So the real people who matter don't have to bother with internal controls if they've got that kind of fraudulent mindset. So they increased equipment revenue and earnings through the improper acceleration of revenue from long-term leases of Xerox copiers and through manipulation of excess or cookie jar reserves. Most of Xerox's topside accounting actions violated generally accepted accounting principles, and all of them inflated and distorted Xerox's performance, but were not disclosed to investors. Comments on this fraud? What else are we missing? Okay. Next one is Lucent Technologies. The SEC accused Lucent executives of fraudulently and improperly recognizing about 1.148 billion of revenue and 479 in pre-tax income during its fiscal year 2000. I think they meant million, but forgot to put that in. Lucent's violations of GAAP were due to the fraudulent and reckless actions of the defendants and deficient internal controls that led to numerous accounting errors by others. In their drive to realize revenue, meet internal sales targets, and or obtain sales bonuses, the complaint alleges defendants improperly granted and or failed to disclose various side agreements, credits, and other incentives to induce Lucent's customers to purchase the company's products. Lucent violated GAAP by recognizing revenue where it could not be recognized under GAAP and earlier than was permitted under GAAP. And side agreements, credits, and incentives, I'm thinking that what was happening, it wasn't real clear from the article, was that the sales representatives got bonuses if they sold enough product. And so they were giving credits, discounts, coupons, whatever, to the people buying the product, but they weren't disclosing it. And it should have been entered as a contra revenue account and wasn't, because that would have then diminished the amount of sales that their bonus was based on. All right, questions or comments on that? Making a private message here. Um, Now we're going to talk about the impact of cultures and laws on international accounting. Um, Cultures and laws vary in different countries, and this has had an impact on their accounting. Some examples. Japan has a web culture. That means that individual expression is not as important as fulfilling one's obligations to one's social groups, which might include family, community, and employer. Each person has a web of interlocking responsibilities. These obligations are called giri. Those who fail in this are subjected to shame and ostracism. Consequently, Japan has a high rate of suicides. Um, I had a friend who was a missionary in Japan for a while, and he brought some of these problems to my attention. They have more than 1 million young people who are in their late teens and 20s who are so overcome by their inability to meet the expectations of getting high exam scores to go to college and get a good job that they won't even leave their house anymore. They're too ashamed to go out in public. So they just stay home all day, surfing the web, playing video games. And he also said that commuting in the city where he was, which was Osaka, which is a really big city in Japan, it was always a good idea to plan to leave earlier than necessary on the subway. Not the subway, but they have these bullet trains for commuting. And if you left at the last minute, you might not get there in time because so many times somebody would jump off in front of the train to commit suicide. You just couldn't handle it. The other thing that you might think is interesting about Japan is what they call the salary man. And the salary man is hired by the corporation. He's expected to work there 6 or 7 days a week, 12 hours a day. And when the 12 hours are finished, he's expected to go out to eat with his coworkers. So consequently, if they have kids, they never even see their father. He comes home after they're in bed and goes to work before they get up. And they may not see him for months at a time. And if they try to live a normal life, then they lose the job because they're expected to have responsibility to the employer. So you have a culture where everything's being connected to everything else. And that's going to apply to Japanese corporate structure. Many firms are interconnected in complex webs of ownership, unlike the USA, in which ownership shares are typically held directly by individual investors. The users of financial statements might therefore be expected to be somewhat different in Japan than in the USA. So let me try to describe how that might work in Japan. A corporation might have 10% of its shares owned by another corporation, 20% shares owned by a third corporation, but they own 5% of the shares of that corporation. And another 30% of the shares are owned by the bank that they do business with, and so on and so on. And so there isn't that much direct contact with individual shareholders who are in the public. It's just a connected web, like a bowl of spaghetti, of different companies owning other different companies. Japanese culture is also very hierarchical. The language has a rich vocabulary of terms that indicate a person's status. For example, there are a number of ways to say the pronoun I, depending on the relative status of the speaker and listener. So if you're talking to someone who has a higher status than you, if you say, I think something, you have to use one form of the word I. If it's someone who's equal social status as you, then you use a different word. If they're a lower social status, then it's another different word. The closest parallel I can think of that is if you speak Spanish, you would know that verbs have two forms. One would be a familiar form that you would speak to friends and family, and another one would be a formal form of the verb that you use when you would be speaking to someone who's in authority over you. Perhaps that's why Japanese corporations do not report directors' bonuses as an expense, but rather as a direct deduction from retained earnings, almost as though it was a dividend. Questions or comments on that? German corporations have two boards of directors. They have a supervisory board called Aufsicht. German is really difficult to pronounce. Aufsichtsrat, that is elected by shareholders, and a management board, Vorstand, that actually runs the company and prepares the financial statement, but whose members may be removed by the supervisory board. And the article that described this was named Aktiengesellschaft. German, they like to take different words and paste them together to make longer words. Traditionally, German corporations were more closely held than were American ones, with a heavier reliance on bank financing. But as the German economy has become more internationalized, the level of corporate ownership dispersion increased. The traditional German model affected financial reporting because the users were not the same as in the USA. That is, in German accounting, fiduciary duties were emphasized instead of the interests of shareholders. Chinese corporate governance has undergone a huge transformation. After the Chinese Communist Party gained control of the Chinese mainland in 1950, private companies were seized by the government and completely abolished. But in the 1980s, private ownership began to be gradually introduced. From the 1980s into the 2000s, a complicated network of corporations developed, with shares in many of them owned by the government or by the military. Gradually, private shareholders began to control some corporations, while others remained state-owned and state-managed enterprises. A stock exchange was opened in 1990 in Shanghai. The government has regulated the stock market and partially adopted IFRS. However, there are unique aspects of the Chinese capital market that have led to differences in GAAP and in governance. So what is the political capital of the United States?
DC?
Washington, D.C. The financial capital?
New York?
New York, exactly. So it's the same here with Beijing being the political capital. And just as it is in the United States, Shanghai is the financial center and the largest city in China. The original communist era accounting rules had to be scrapped before Chinese corporations could compete in a global economy. The new Chinese accounting standards for business enterprises, called ASBEs, issued in 2006, are almost 90 to 95% the same as IFRS. Further, many Chinese companies are offered on the Hong Kong Stock Exchange, which allows ASB's, IFRS, or its own standards, as shown below. You're aware that Hong Kong used to be a British colony until the 1990s. Then it was returned to China, but it still has its own self-governance. And so the economic and political system in Hong Kong is different than it is in mainland China. So take a look at this chart. When it was prepared, 296 companies were listed in the Hong Kong Stock Exchange. 90 of them were filing under IFRS. But if you look over here, 69%, they were the big ones, 69% of the dollar amount of the companies. Only 30% of the number of companies, but they were more than double the average size of the company in this Hong Kong exchange. Then 161 companies were following Hong Kong standards, over half of the ones, 26% of the market capitalization, and 45 were following standards from the mainland, 15% of the companies, but not a lot of investment in them, only 5%. KPMG, a multinational CPA firm, has offices in 16 Chinese cities with 9,000 employees. The firm prepared a detailed analysis of the differences between Chinese standards and IFRS. 3 examples taken from this analysis are listed below. Chinese companies' fiscal years must be the same as calendar years. That is not required under USA GAAP or IFRS. ASBE requires the direct method of cash flows along with the reconciliation of cash flows to accrual basis. IFRS and USA GAAP allow either the direct or the indirect method. ASBE allows the capitalization of interest costs for manufactured inventory. That's not permitted under IFRS or USA GAAP. Main problems of corporate governance in China. Because of the high degree of state ownership of listed companies, the minority shareholders are marginalized. This also means that there's sometimes not a clear-cut separation of ownership and management control, and the state can interfere in company management issues. The strength of this state involvement means that there are few really independent directors, so there's a high degree of insider control. There's a lack of transparency and accountability. Questions or comments on that before I move on to the next country? And that is India. Government and business in India have been notoriously corrupt. to such an extent that the nation began to realize that corruption was impairing its economic growth. The causes of corruption in India include excessive regulations, complicated taxes and licensing systems, numerous government departments, each with opaque bureaucracy and discretionary powers, monopoly by government-controlled institutions on certain goods and services delivery, and the lack of transparent laws and processes. So, especially if you have a whole bunch of departments with unclear rules and the ability to make decisions on their own, it kind of sets the stage to someone being unable to get anything done without bribing them. And making the problem worse, the bureaucrats in these departments are often hardly paid at all. And so they need the bribes to make a living. And it's a kind of what they call a vicious circle with the parts feeding on each other. After a series of high-profile corporate governance failure scams, the Indian Parliament passed the Indian Companies Act of 2013, which introduced some progressive and transparent processes which benefit stakeholders, directors, as well as the management of companies. India is in the process of converging its accounting standards to be compatible with those of IFRS, but the process is not yet complete. Questions or comments? The stock market in India is in the city of Mumbai, I believe. If we go to the map here, it's down on the southwest coast. There's another huge city right here called Calcutta. And then the capital, New Delhi, is around in this part of it. I saw on the news last night that they were having stay-at-home orders in India because of the coronavirus. And that's going to be difficult to enforce with 1.3 billion people, some of whom are so poor that they have 20 people living in 2 rooms of an apartment. And I was pointing to that on the map and I didn't do the screen share, so you couldn't see what I was doing. Let's try that again. Okay, so down here is where Mumbai is. That's the entertainment capital and the financial capital. They have the stock market there, and that's where they make all of those Bollywood movies, if you ever watch them, or if you are familiar with them. Capital's up here in the north central area, and then down here is Calcutta, which is another huge city. One of the curious things about India is you see this part up here that's almost separated from the rest of it by Bangladesh. And that little part of India, they have a province that is 90% Baptist, which I think is just kind of peculiar. Harmonization of accounting standards. In the latter part of the 20th century, corporations were becoming increasingly multinational. Not only were they doing business in multiple countries, but their stock was beginning to be offered for sale in multiple foreign stock exchanges. However, at that time, every major country had its own set of different accounting standards, and it was a daunting prospect to investors who wanted to try to compare companies from different countries. There were several rather different models of accounting systems influenced by the cultural, economic, and religious perspectives of a country. The 7 main types are listed on these slides: Anglo-American Dutch model, continental Europe and Japan, Latin America, third world, changing economies, socialist and communist. But I think we can leave that off until Monday. I think we've got enough time left in the semester that we can do about a 35-minute lecture each time. So any questions or comments? I haven't checked to see if second drafts of the paper were submitted yet. I've got most of the cases graded. I'll finish that today and tomorrow. Anything you need to ask about? Then be careful, follow the advice that you hear in the news about staying safe, and we went shopping at Walmart yesterday morning. It wasn't that crowded, so it didn't seem like that bad. Except for the one guy that sneezed explosively. I was glad he was facing the other direction. And every time we saw him, my wife wanted to run away. Because she thought he might do it again. So they were out of ramen noodles. They were out of paper towels completely. They had a little bit of toilet paper left that was the most expensive brand. Trying to remember, the kind of smoked sausage that we like to buy, they were also out of. They have these, I have stopped buying sausage and lunch meat that have the nitrites and nitrates in them for preservatives because they're carcinogens. So we're getting the ones that are, what's the word that they used? Uncured, or they use natural ingredients. They're not necessarily organic. So we get these little smoked sausages. They're a little too salty, but when you mix it with other food, they're pretty good. And they were completely out. So I had to settle for turkey hot dogs. All right, I will see you on Monday, and keep in touch. Take care. Bye now.